So traders, in today's video, I'm going to talk to you about the 7 reasons why I believe gold and silver and also the miners are going to be the greatest bull market we've ever seen in history over the next, say, 5 or 10 years as this decade unfolds. I'm going to talk to you reasons why. I'm going to go into absolute all the details. So let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty, traders, I'm very excited for today's video. But before I get into it, guys, a little bit of a Christmas gift. I'm giving away a free trading course. If you need help with, say, some of the foundations, the chart reading strategies, mindset, that I've put it all in the trading course. When you go over there and put your name and email in, the very first video of the trading course, you're going to get 2 powerful trainings put together in one of amazing patterns that produce long-term bull markets. And also you're going to get access to a 90-minute training of my #1 trading strategy and also how I trade the markets and so on and so forth. And then over the next week, I'm going to be releasing more videos that goes part of the actual trading course for free. So go get access to that free trading course below right now. It's a bit of a free Christmas gift, so it is just for a limited time only. Just doing it to help you and give back. Now, let's get into the 7 reasons why gold and silver and miners are going to be the greatest bull market we've ever seen. And this is not tomorrow, guys, okay? Because, you know, nothing happens over one day. It takes time for these things to unfold. And, you know, I truly believe if we look back over this decade, okay, or even by 2025, really, it was what I believe. And this is what you're seeing here is why I personally have been loading up and been focusing a lot more on my longer term investing positions in this sector. Some silver stocks. I'm silver stocks right now. I'm in some of the gold miners, some of the silver miners. And also silver and gold as well too. So a lot of my long-term investing, I'd have to say pretty much close to 90% of it is in the miners and metals and so on and so forth for that reason. So let's get straight into these reasons and why I see this. Now, reason number 1 is this. I truly believe that if you're old enough, you would understand this, right? If you've gone through life, maybe if if you're into your mid-30s or even mid-40s, if you look back over history, you'll know that there's cycles to everything, right? Nothing goes down forever and nothing goes up forever. There's cycles to everything. There's a big market cycle to everything. So if you look at the last 10 years of what has actually happened in this environment, what's happened? The last 10 years, we've seen an equity boom in the last 10 years, right? It's been a massive equity boom. And by the way, over the next couple of years, I do see another equity boom based on all the printing of money. But I do see another equity boom, but I see even more of a boom this next decade instead of this whole decade being another equity boom like we've talked about. We may initially for the next couple of years see an equity boom based on the printing of money, but I truly believe over this next 5 years, especially this whole decade, we're going to see one of the greatest booms we've ever seen. And the next decade is going to be for the metals and miners. And back to the big market cycle, 2010, 2011, we had a massive spike, right? In a lot of the miners and the metals, silver, gold, and all that sort of stuff. We had a massive spike. And in fact, if I bring up my charts here for a minute, let me bring up my chart. You'll be able to see that, let's actually go back to, say, a monthly chart here for a minute. So this is the gold monthly chart. I'm looking at the GLD, but it's the gold monthly chart. And we can see what happened here, right? So the 2010 into 2011 and 12, we had a massive run to the upside. And as you can see, what ended up happening? We actually came back down and we did nothing for a very long time. And now we're just starting to break out. Makes sense? So what does that mean in the big scheme of things? As you know, the stock market has continued to do what? The stock market did this. Yes, the stock market got this, but what happened with the stock market? The stock market just did what? It just kept going up, didn't it? It just kept going up and up and up and up and up. But as you can see, what happened with gold and what happened with silver and all the miners and metals, they got thumped and then they got all the way down through here and they've done nothing. So on a big picture things, now guys, this is just my opinion as well too and what I see. On a big picture things, the big market cycle is everything goes in cycles. And if we can stand back and look at it from a 10,000 foot view of, okay, we can see over decades and decades and decades of history, and even hundreds of years of history. It's one of the reasons why I recommend you reading a lot of Ray Dalio stuff, because he provides history, is that we know when things are not doing too well or no one wants to be part of it, that's probably the best time to be getting involved with it, right? And so on and so forth. So the big market cycle is indeed last 10 years, equity boom. This next 10 years is going to be probably miners and metals. Now, number 2 is technical analysis says we have a lot of energy built up and we are going to start using it. Now, what does that mean? If you've watched my last few videos, oh geez, I'm burping all over the place here. If you've watched the last few videos that I've done on my YouTube channel as I'm watching this video, if not, that's okay, that you'll notice that on a technical analysis basis, there's a pattern, there's a thing called energy building. And essentially what that means is, let me just go back to here. Let me go back to the gold chart. The gold chart, energy building simply means this. Energy building simply means when we're not really in a bull market and we're not really in a bear market. We're just going sideways. And as you can see, this here was gold for quite some time. Notice how gold really didn't do anything. And this was from 2013 through to 2000 and sort of mid-19 before we started to break out. That's as of doing this recording now anyway. So as you can see that by looking at this whole pit through here, this here is what I call an energy building. When the market does nothing and just goes sideways for a very, very long time, this is where I call the energy, it's building up with energy, a lot of energy. And at this time, if I go and have a look at, say, things like the GDXJ as an example, right? We can see, look at the GDXJ, we can see what? We can see how it's done nothing 2013 through to where we even are right now. We've just started to slightly break out now. This is a weekly chart, by the way. But we can see, what has it got? It's done nothing for a long time. Now, when the market does nothing for a long time, we know it's building up a lot of energy. And it's been years and years and years of the energy being built up in, say, things like the GDXJ and also the other minor indices as well too, such as the GDX, the SIL, and also the SILJ, stuff like that. Now, this, by the way, guys, this doesn't apply to all mining stocks, because some mining stocks are going to do well, some mining stocks are not. But what I do see is the major indices, such as the GDXJ, GDX, the SIL, those main indices are likely to do really, really, really well. I don't know about the individual stocks. You have to do your analysis here, but on a big macro scale, on the average of what we look at for the mining the ETFs, that is likely to be in a big bull market. So the energy built up once again is when the market's done nothing, and you can see here the GDXJ has done nothing. You can see the GDX, same sort of thing as well too. If I look at the GDX, you can see how the market really just did nothing for a very, very long time. Just stayed down the bottom here between 20 and 30. Really didn't go up, really didn't go down. And now we're just starting to break out. Now we had a lot of energy here. The SIL and also the SILJ, you can see here that we really have been range bounding for a very, very long time. We haven't been going up, haven't been going down, and so on and so forth. So, and if you look at silver, silver is also another one where you can see the market has just done nothing for a very long time. And now we're just starting to break out now. So we're starting to release some of this energy. So that's what I see. Man, okay. So technical analysis says that we have a lot of energy built up and we are going to start using it. And as you saw with gold, right? Gold did nothing very, very long time. And as I'm doing this recording, what happened with gold? Gold has already started this big bull market. Now, guys, just so you know, when I say bull market, that means we may go up for 2 or 3 months and then have a month or two pullback. All right. So it doesn't mean a bull market is not a everyday go up. A bull market is this. And these bits here, especially what we're experiencing right now, could be 2 or 3 or 4 months of a pullback before we see another 4 or 5 month boom. Make sense? So just make sure you understand that when I say the greatest bull market ever seen, that's what you're likely to experience. Now, moving over to number 3. The printing more money. Now, a lot more money. We know, if you have studied history and you read Ray Dalio stuff and you see where we're going, we know that they're just going to keep printing and keep printing and keep printing and keep printing more money. And that's going to continue to devalue the dollar, and it's going to push up gold. Now, if we have a look at, say, how much money they have been printing, looking at the M2 money this is the fred.org site. You can see obviously the printing of money that's happened through here. Let's actually blow this up. There we go. So you can see over time, right, we've continued to get more and more and more and more of printing of money here. But look what actually happened here. Look at recently. This is because of the cough situation that happened recently as of doing this recording, and you can see that. I wonder why this is just. You see how it's changed color ever since February. It's actually changed color to this here. I wonder what that's all about. Anyway, maybe because it's current year. No, actually. Oh yeah, I don't know what that's all about. But anyway, as you can see, ever since the cough situation, we spiked, and we've actually and it's not like we did a bit of a cash injection or currency injection into the system, and then we stopped. Right? Look what actually happened. If I zoom in even more, we've continued to go up and 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 up. Right? It's just going to keep going up and up and up, and they're not going to stop here, guys. They're not going to stop. They're going to keep printing and printing and printing and printing. And obviously, what happens to supply, right? If you have a lot of something in the marketplace, guess what? Is that now a rare source? No. So therefore what? It devalues that. So if you have a lot of it in there, just it's like in a store, right? If you only have maybe 4 or 5 of maybe a furniture left or a TV left, guess what? Oh, there's not, and it's only limited supply. Guess what? Now you can put up the price. But now we're printing a lot more money. You know, a lot more money. It's out there. It's worth less and less and less and less and less. So the printing of more money is going to continue to devalue the dollar. We're going to just keep going, keep devaluing and devaluing. And also that's going to continue to put pressure on the upside when it comes to gold and silver and the miners going to move. Number 4, possible defaults and restructuring. Now, this is going to equal loss of confidence in the government. Now, what I mean by possible defaults and restructuring is this. Going off the back of what I just said there a minute ago about what they're going to continue doing. They're going to keep printing more currency into the system. They're going to just keep printing it and printing it and printing it and printing it. Now, we know the more they print it over time, there's a direct correlation, right? We know, and if I just bring up this whole money supply thing again. Let's go back to here. All right, there we go. All right, so there's a direct correlation, and I haven't got this on the charts, but you would know this. There's a direct correlation to, okay, printing of more money goes up, but what's actually happened to the value of the dollar? We know the value of dollar has done what? Done this. So because the more they print it, the more it's in more currency in the system, blah blah blah, all that sort of stuff, right? So look what's happened now. We've got a massive spike, so we're obviously getting a massive dive in the actual. And I think right now, I think it's right about purchasing power. I saw this recently, but something like 30% of every dollar out there is actual real purchasing power. Something like that anyway. I've got to look more into it, but it's something that I just like, oh wow, I didn't realize that. So the more printing of more money, and so because of that, the debts are going to keep getting bigger and bigger and bigger and bigger. Okay, so what's going to happen with that? There's going to come a time where interest rates are going to start to go back up, and people say interest rates are never going to go back up. What a load of bollocks, right? What a load of bollocks. There will come a time, whether it's forced inflation, where, you know, because they put too much currency in the system, and I'll talk about that in a minute, maybe that's going to cause inflation a bit later on, where things are just going to go crazy, and now they have to force interest rates, or the free market just starts pushing the interest rates up. Either way, there's going to come a time where the government is continuing to be slowly squeezed and squeezed and squeezed, and this is also going to put a lot of pressure on government-assisted jobs over the years, right? Over the next 5 or 10 years. And the reason why is because they're going to print more money and more money and more money. They're going to have all these debt burdens. And so therefore, it's going to be really hard for them to keep up with a lot of their, you know, the IOUs, which is, you know, pensions. And that's the reason why Robert Kiyosaki is saying, who stole my pension, right? Pensions, healthcare, hospitals, teachers, government-assisted jobs are in threat. this decade moving forward. So if you're ever looking for a job, get out of the government. And if you look at this here, remember I said before about big market cycles. If you look at this, see this one here, the big market cycle. Well, if you're looking at what I'm talking about here, number 4, guess what happened, right? When I grew up, right now, I'm in my mid-30s. You know, what happened 30 years ago when I was growing up? What happened? Everyone was talking about, oh, you need a government job, right? Because government, it's safe, it's secure, you know, you get good pay as well too, and all this sort of stuff. And then, you know, it's such a secure job, right? And you and leave a comment below and let me know if you've actually heard that as well too, right? Government assisted jobs are safe and secure. So again, everything goes in cycles. What once was is not what is going to be. So for the last 10, 20 years, maybe longer, what has been the most secure jobs has been government assisted jobs. People like, you know, I remember growing up, guys, there's people like, oh, you know, you need to become a train driver, because if you get a train driver, you know, you work for the government and it's good money and all this other benefits come after that. But what's going to happen when they're going to start to become more slow? It's a slow grind pressure on their IOUs when, again, if they continue to print more money and then suddenly interest rates start to go up because they have to go up, free market or either inflation, or maybe just all asset prices just start to go crazy. You know, maybe even the stock market and the property market just goes through another massive boom, and now they have to start to do something to try to calm it down because things are just going too crazy. Maybe they start to raise interest rates then. I don't know. But we do know over the next 10 years that they're going to start to raise interest rates again. And they're not going to stay at zero for the next 10, 20 years. We know there's going to come a point in time. That's why the big guys out there are right now loading up big time on a lot of asset purchases, because they know, especially over the next 10 years, they can lock in a very low interest rate. So I truly believe we're going to go back to another 5% or 10%. There's going to be something that causes it. There's going to be a lot of debt defaults, restructuring on government bonds, and so therefore, because of everything I've just said there, that's going to cause a loss of faith and confidence in the government. And this is when this happens. Sometime in the next 10 years, we just don't know when. Or should I say, as it continue to happen, right? Because it's more of a slow grind. It's not just one big bang and suddenly the government is now under pressure. Right, it's a slow grind. It's a slow squeeze. Like they print a little bit more money, there's just a little bit more pressure. They print a little bit more money, and they try to raise taxes to try to overcome the debt. And they print a little bit of money, and see they just and suddenly, oh no, the interest rates go up just a little bit. Now they're under a little bit more pressure, and now they have to start cutting back spending, and the interest rates go up just a little bit more. And now they're under pressure. Then they have to print just a little bit more money to keep things going. See what I'm saying? It's a slow grind pressure on everything there, and that's where government assisted jobs are going to be under threat, and defaults and restructuring is likely to happen based on the government IOUs, government bonds, and that's going to cause a loss of faith in confidence there. Number 5 is civil war and revolutions. Now, if you've read a lot of Ray Dalio stuff, I learned a lot of this stuff from Ray Dalio, so big thumbs up to Ray Dalio on all his work he's done. That we know right now, especially civil war, where we are right now is crazy. If Biden gets in, or should I say, no, if Trump wins, the other side, you know, is gonna, you know, yeah. So let me start that over again. If Biden wins, Trump supporters are gonna go whoo. Right? And it's going to be a civil war. If Trump ends up getting into office, guess what's going to happen to all the supporters of Biden? There's going to be a higher. So because the wealth gap of what's happening right now, we are more divided in history. So either way, if Biden ends up getting in, oh my goodness, there's like going to be something like 75 million Americans that are going to just like be so cranky at the fraud and all that sort of stuff in the system. Now, here's the thing. If Trump ends up getting in, then we know Biden and the system are going to be so cranky because, you know, Trump got in and so on and so forth. And now that's going to cause, you know, a civil war. Eventually it might cause revolutions. And all this what I said before is going to cause a lot of uncertainty. And so therefore I believe it's going to be a rush to gold. And also, number 6, the velocity of money. Now, I truly believe that at some point, all this velocity of money, the velocity of money right now is at an all-time new low. So I truly believe that what's happening right now is they're going to keep printing more money, which can put pressure on the government. Number 6, civil wars, all that sort of stuff because of what's happening right now, wealth gaps and so on and so forth. Now, the velocity of money, which is continue to be very, very low, and we know that what's been happening over this last 6 months, right? We know savings rates have spiked because all the currency that's going into the system, they're taking actually a lot of that and they're taking some of it and actually saving it. And so I truly believe that if we have a look at this chart here, this is the velocity of money. We can see velocity of money has taken a dive recently. And this velocity of money has, if we can see through here, and we can see the velocity of money has just taken a massive, massive dive. Now, once again, we can see this big move to the downside. Now, remember what I said before, that everything goes in cycles. So if we have a look at number 1 again, the big market cycle, I truly believe that this here, the big market cycle, that that the velocity of money has been going down ever since 1996, somewhere around about there. It's been topping out, and basically into the 2000s, that's when we started our decline on the velocity of money, of what's actually happening through here. So I truly believe that all this currency that's going into the system, all this currency, this here, that number 1 velocity, all the currency that's going into the system is going to, at some point, allow people to feel a bit more safe, a bit more secure. That's the reason why savings accounts are spiking, because they're unsure, but they're going to keep printing more money, and more money is going to go into the accounts of people. And when they start to go into the accounts of people, they're going to get to a point where the savers have saved enough and they feel safe. Then they're going to go out there and start to spend. There's going to be a tipping point. So they're going to keep printing more money, printing more money, printing more money. Velocity is going to go down, 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 down. All right, they're going to keep going down, and there's going to come to a point where, once again, all the currency in the system, which is devaluing the dollar, which is doing all the stuff we talked about in this video today, all that currency into the system is then going to start to allow people. There's going to be a switching point at a point where people are going to start to feel safe, and they're going to go out there and start to use that currency. And when they start to use the currency, the velocity of money is going to spike. Now, we never know when this is going to happen, but just believe that, once again, everything goes in cycles. So if something's been going down for a very, very, very long time, just like gold did, right? Gold went down from 2011 to 2013, from 2013 to 2019, did nothing. And guess what's happened? Now we're starting to go back up again. Everything goes in cycles. So we've had 2 decades now of velocity of money dropping, and there's going to come to a point of time, I truly believe, that with all the printing of money, more money, people are going to get to a point with their savings account that they're going to start to feel a lot better about the dollar or about the currency they got in the account. Then they're going to go out there and start to spend it. That along with also the devaluing of the dollar as well too. But to keep it really, really simple, more currency into the system, to me, at some point, is going to equal higher velocity. When that velocity starts to spike and starts to change the trend, it's going to be too late for the government to pull back. This is going to start to cause inflation at some point. Now, the reason why the inflation right now is not as high as some people say, like the inflation, their inflation numbers has been quite low. And if I bring up the actual inflation numbers now, let me actually bring this up here. So this is the inflation rate that we're looking at now of the US. So if we have a look at the last, say, 5 years, let's have a look at the last 5 years. You can see the inflation rate drop down. Look at the last 10 years. We can see we've been pretty flat through here through the inflation rate. Now, the reason why the inflation rate has been like this, even though food prices have been slowly going up, is because technology has been going down. Now, once again, this is a big thing that most people don't understand about the inflation. The reason why inflation hasn't started to go up yet a lot is because, once again, a lot of our living standards, yes, have increased, But as you know, things like technology and all these other, all that thing, like, recently I just bought a TV for like $200. Before that same TV, like a year ago or 2 years ago, was like $900. So that's deflationary. Technology is deflationary. So that's what's balancing that out. What happens when people start to use all these currencies, start to flood the market, velocity of money spikes up, that's when we're going to start to see real higher inflation at some point. And all of this is going to equal more bullishness for gold and silver, and especially miners and metals because they're inflationary there. And also the very last one of the whole lot of what I truly see, that reasons why gold and silver and miners are going to be the greatest bull market we've ever seen, is no one's talking about it. Well, there's a few people out there talking about it. But when you talk about mainstream media and all this sort of stuff, guess what? Guess what people are talking about right now? People are talking about, stock market at all-time new highs. They're talking about Bitcoin right now, all this sort of stuff. Now, no one is talking about it or wants it. What's happening even right now? People are like, oh, I'm sick of miners and metals. I'm getting the Bitcoin, right? That's what people are doing. Some are even leaving. So no one's talking about it. No one really wants it. It's like, what? Gold, silver? What? Mining stocks? Are you serious? Why not get into the Bitcoin? That thing's taken off. And why not get into the stock market or whatever? And once again, even right now, and I saw some recently on people on my YouTube channel, even some people are leaving right now to jump in on that bandwagon. That's the biggest mistake of all. That is one of the biggest signs to tell me we're getting ready. We're getting ready for that next, we're getting ready for at least another big leg up. But at least right now, on a major scale, guess what? When no one is talking about it, when no one wants it, when the public don't want it, guess what? That's the time to go in. Guess what happened in 2008 and 2009? And I remember this here. What happened to the real estate market? Oh my goodness, it got crushed, right? US market got absolutely decimated. And I remember in 2008, my mentor came to me. He said, "John, this is the buying opportunity of your lifetime. If there's a time right now for you to come and buy some property, the time is right now for you to start to load up big time, because this is a great opportunity." Now, once again, I never understood market cycles, because when the markets go down a lot, when there's a big crash, right? When there's a big crash, guess what inevitably happens? Just like the COF situation, my equity market was down 30%, and regardless of what the government did, right, we still rallied back up. Same with the 2008 situation. Market goes down, there's market crashes, there's depressions. Through all the history, what inevitably comes back after a big crash in the markets? With anything, right? With anything. Now, 2008, what was happening? No one wanted to touch property, right? Everyone was fleeing from it. No one wanted to touch property. It was the worst thing. My mentor was smart. He's like, this is the time to start buying a lot of stuff, because this is the time where you're going to start to do really, really well. And at that time, I was still a bit uneducated. I didn't understand market cycles. I didn't understand the big picture. I was actually a bit nervous myself, because I was listening to the whole mainstream. And so I sort of stood on the sidelines there, just a bit worried there. Anyway, so we know what ended up happening, right, in 2008. And what happened 10 years later? Where are we right now? We're going through another property boom. And that crash was a buying opportunity of a lifetime. What actually happened throughout this situation, throughout this year, or through this year of doing recording with the whole COF situation? Back in March, when we had like a 30+% decrease, crash in the markets, guess what? Buying opportunity of a lifetime. Now, that opportunity I did take, right? I started buying some stocks and so on and so forth, and call options and so on and so forth. And I didn't hold on to it long enough, but I did make a lot of money from buying when the market was crashing, knowing that inevitably over the next 2, 3 months, 4 months, I know maybe even 12 months, we're likely to see another great boom, because this is how market cycles go. And if I look at here in Australia on the Gold Coast, if you guys know, here in Australia, you've got Brisbane, you've got the Gold Coast. On the Gold Coast, there was one point there where the Gold Coast market actually crashed around 60%. Mansions, $4 or $5 million mansions were on sale for like $1 million, $2 million. And what did my mentor do? He went, oh my goodness, this is a buying opportunity, right? Because every crash, smart people know this is the time to buy. This is when you start to like, oh my goodness, this is the time I've been waiting for. and then they ride the next few years bull market. So what did my mentor do? He went out there and he started buying mansion. He actually bought his mansion, or his house that he bought was like a beautiful mansion, massive house on the water. I think it only cost him about $1 million or $2 million, somewhere around there. Beautiful. That was worth like $5 million beforehand. And now that exact same house right now, it had to be worth at least $5-6 million. Now this is going back probably 10 years ago now, maybe a bit longer. So over the last 10, maybe even 15 years, he's gone from a $1 to $2 million investment, and that property is now worth about at least $5 million, $6 million on the water. So as you can see, right, major wealth is created from understanding these major cycles. And so right now, when I'm looking at all the markets, what is everyone talking about? Bitcoin. So that's the reason why not to touch Bitcoin, okay? This is long-term investing, long-term wealth generation. So no one's really talking about gold or silver. There's a few people out there talking about it, but it's not very, very loud right now. Or no one really wants it because they think, oh, it's nothing really happening. And once again, even some people are leaving right now when it comes to even the mining stocks. People are leaving to jump on Bitcoin. And all of this here, everything I've gone through here, guys, is the reasons why, if you're looking to build some massive wealth this decade, yes, we're likely to see another boom in property and also equities. So some equities, should I say? Not all equities. But I believe if you're looking to buy and hold something for this next 10 years to generate jump on the greatest boom in history, people are looking for the stock market to crash. Why not even jump on the opposite side? Why not jump on the next greatest boom in history, which I truly believe is going to be the miners and metals. No, not all miners, not all metals, guys. So you need to do your analysis there. What I'm talking about here is just probably the main indices like GDX, GDXJ, SIL, SILJ, gold and silver. That's what I'm talking about here, okay, guys? The averages there. Not the individual gold stocks or not the individual silver mining stocks. Some will, some won't, but those indices I truly believe the averages are gonna be really, really, really bullish for this year. So anyway, guys, that's it for me. Leave a comment below and let me know what you thought about this here. Which one do you agree on? Which one don't you agree on? Did I leave something out? Did I miss something? Leave it in the comments below and I look forward to speaking to you real soon. Hey traders, John Howell here. Thanks for watching my video. For a limited time only, I am giving away free access to my brand new trading course. I've put all my most powerful systems, strategies, and trading techniques that I've learned over the last 15 years and put it in this course, and I'm giving it away for free for a limited time. See, in this brand new Go to the Markets by the Board trading course, and you can get it when you go to johnsfreegift.com, you're going to learn, firstly, you're going to get access to a brand new training that goes for 90 minutes, and you're going to learn all the details step by step to my #1 trading system with over a 90% success rate that works on any market and any time frame. You're also going to learn 3 powerful chart reading and trading techniques. You're also going to learn 2 more powerful trading systems, and also you're going to learn 7-figure trading secrets, mindset techniques, and so much more. There's top 13 mistakes you're going to learn, the 10K per month formula, and so much more. No, this is not a get rich quick scheme, but if you are struggling with your trading right now and you need help, then for a limited time, you can get free access to this. So go to johnsfreegift.com right now or click on the very first thing in the description because for a limited time, I'm giving away. So go to johnsfreegift.com right now and start getting access to this full complete trading course plus also the free training with my #1 trading system with over 90% success rate. Go do that right now and I'll see you on the next page.